And joining me now for a closer look at the day's market action is Annatjie Van Rooyen from MyWealth Investments. Thank you so much for your time, Annatjie. Of course, quite a lot of chaos that the tariff threats are still imposing on the markets. And yesterday, we did have an announcement coming through for the automotive sector. Those will come into effect on the 2nd of April. Considering how important the automotive sector is for a lot of regions, including South Africa and Europe, what are you making of this kind of pressure that we're seeing?
Good afternoon, Annatjie, and thank you for having me. Yes, look, we are still witnessing elevated levels of uncertainty in all markets due to this global shift in trading, and countries around the world have to recalibrate the economic policies to move forward. So today we have received quite a negative handover from the Eastern markets, and this is purely on the back of risk aversion and the fact that reciprocal tariffs will kick in next week, as well as the tariffs on autos. And then that's not all. There's also oil that's getting added to the mix of commodities affected by tariffs, as countries buying Venezuelan oil will also face 25% tariffs. And this, of course, will affect China, as they import a lot of oil from Venezuela. So lots of uncertainty to deal with, and markets in South Africa today moving into a wait-and-see mode because lots happening next week. Also, the vote on our budget in South Africa, plus all these tariffs taking effect. So quite a lot happening next week. Also, the non-farm payrolls next week.
A lot that is happening globally and locally, and of course we will be keeping a close eye on those market influences. We're talking about things that influence the market, also leadership changes, and we had those coming through from Capitec. The market doesn't seem to be liking the fact that Fourie is retiring in July this year. Of course, he has led the company through a lot of growth. The stock did a slump of 4% in morning trade. Just highlight Capitec's growth proposition and evolution really under Gerrie's leadership.
Yes, look, he has been the CEO and he will retire after 25 years of being part of this executive management team. He has led the company, as you have mentioned, through a period of significant growth and transformation. But the bank does have a strong leadership structure in place, and they have an experienced executive team to lead the company forward. He will be succeeded by Graham Lee, who has been part of the executive team since 2022, and he's also been with Capitec since 2003. So he will work closely with Gerrie for the next 4 months to ensure a smooth transition. So I think this pullback in that share price is probably a nice buying opportunity.
Yeah, nice buying opportunity and a knee-jerk reaction. And of course, it will be quite interesting to see what Graham Lee does for the Capitec's next phase of growth as it tries to really keep its position as a leader in that banking sector. Let's go into telecoms. Telkom released an initial trading statement this morning. The telecoms company saying that it expects total headline earnings per share to increase by 10%. We did see a continuation of the upward momentum on the share price, climbing almost 3%. Not a lot of color that they gave us in that trading statement, but can you fill in the gaps for us?
No, it's just that the company is delivering on their cost-cutting and restructuring initiatives with this announcement of the sale of SwiftNet, or the tower business. The market's been aware of this deal for quite a long time, but it has now been concluded, and the actual amount that they will receive is 6.575 billion. So, of course, this is helping them to increase their basic headline earnings per share by 300%, but EPS will only increase by 10%. Actual results will be released on the 10th of June. So we'll have to wait for the actual results before we can actually analyze it and fill in all the gaps.
All right. And we are still hot within results season. So a lot of companies coming out with trading statements. We did get a trading statement from the private hospital sector from Netcare with its interim trading update there, saying that they have seen increased activity and improvement in a number of metrics. There's also talking about the impact of the Easter holidays, still also complicated case mix after COVID-19, but they have maintained their full year guidance. Talk to me about your reading of what they came out with today.
Yes, Zanotti, as you have mentioned, they've stated that revenue growth is expected to increase between 5 and 6%. So this puts them right on track to achieve their guidance for 2025. This is lower than the 6.3% revenue growth achieved in 2024. The paid patient days are expected to increase by 1.1%, and the guidance was for 0.8 to 1.3%. So this is towards the higher end of that range. And then their acute occupancy has increased from 62 to 63.2%, which is positive. Demand for mental health services remain robust, but occupancy has come down from 69.3 to 67.8%. So all in all, a solid trading update. But of course, they're still subject to regulatory risk in the longer term, which can impact their earnings negatively. But let's not go there right now.
All right. Well, Annatjie, before we get to your stock pick, let's quickly reflect on some of the counters that have found favor with your industry peers.
I'm going with Netflix, and for two reasons. I mean, I know that the valuation multiple doesn't suggest a dip in roast, but I think if one looks at the fact that they've scaled up their content business, which has often been the element that has collapsed many media companies, the creation of content. And they've been feeding this massive machine of 300 million subscribers. And at a point where they've achieved economies of scale on that content, and they may now use things like monetization of advertising that can help them to offer more attractive subscription bouquets. And I do think that there is quite a decent potential for them to drive advertising growth to a point where they could unwind that P multiple of about 37 times forward quite quickly. So that would be my preference. I mean, they're going global, and their global growth strategy has done well over the last 5-6 years, and they seem to be gaining more countries or getting to more countries here.
So it's Procter and Gamble. Look, it's been trading in a price range between $160 and $180 for a while now. They're sort of midpoint there. So I think our fair value is about $180. That's also a technical target. So I just want to play it safe. It's sitting on a div yield about double what you'll get in the Russell or the S&P 500. It's a dividend aristocrat. It's grown its dividends for more than 25 years in a row. Wow. It's very stable in a volatile environment. It's got huge pricing power. It makes all of its products in the US, so tariffs won't really affect it. So it's purely defensive, and just, I think, some players to park your money relatively safe in this very uncertain economic world.
Well, Annatjie, let us get to those Netflix, of course, something that a lot of us will be doing this weekend, and it is cold and raining in Joburg. It's quite interesting because there was a time when Netflix was going through it and people weren't really sure about their content offering, but it seems that there's a turnaround that's happened there.
Yes, definitely. I think there's a solid investment case for Netflix, and there's obviously solid underpins for revenue from increased broadband connectivity. The value of its content library, seen a huge improvement there since COVID days. And then also the momentum from ad tier subscriptions. So what's also been very impressive here is the margin expansion that this company has achieved. And I think the real long-term value is derived from the increasing market leadership. So it's not cheap, but it's a forward PE of about 36 versus the average of 37 times. But I do think that there is long-term value in this counter.
All right. What about Procter and Gamble? A counter that provides a lot of consumer goods that we use in our homes.
Yes, also, I agree with that one as well, as long as you keep in the back of your mind that this company will be subject to volatility from changes in inflation expectations as the President Trump is changing his mind from one day to the next. But on a forward PE of 24.4 versus his average of 23.5 long term, and solid earnings growth and dividend growth, I do think that this one is a good one to go for as as the previous panelist has mentioned.
All right. Well, let us get to your stock pick for today. What are you hanging your hat on?
I'm going to go with Prosus, just purely because there's still that discount to the NAV. And also, this is where I would like to find my exposure to the Chinese tech sector through its investment in Tencent. And just last night, Tencent announced that they'll be adding another 25% stake in a French gaming company, actually a subsidiary of a French gaming company. So they're continuing to grow. And, you know, there's been a shift from US tech into Chinese tech. So I think this is the easy way for us in South Africa to get exposure to that sector in China. And then also, the Prosus also focused on strengthening their leadership position in Europe, in the food delivery market, and with management still being actively focused on addressing that size of the discount with their share buybacks and unlocking value of unlisted investments, I think Prosus offers very good value in the longer term.
Oh, great. Thank you so much for your time and for your insights there, Annatjie. Do have a good weekend. That was Annatjie Van Rooyen from MyWealth Investments.